Our next presenter is Glenn Jardine, Managing Director of De Grey Mining. Glenn is a senior mining executive with direct experience growing resource companies from early stage exploration through to multi-operation entities. This includes taking projects through feasibility studies, equity and debt financing, project development and operations. Commodity experience includes precious, base and bulk commodities across both underground and open pit. Glenn, we look forward to hearing more about De Grey and its exciting 11.7 million ounce Mallina Gold Project. Thanks, Glenn.
Thanks very much. It's great to be back at Diggers and Dealers again, and thank you to the organisers for putting on another great conference. Just please take notice of the disclaimers and forward-looking statements. First of all, we'd just like to acknowledge the traditional owners of the land on which we work. We've got quite a few traditional owners up there on the package that we've got at the moment. The main group there is the Kariyarra people, and we're working on their ground when it comes to Hemi. And we'll talk about the relationship with the Kariyarra a little bit later as well. So just in terms of where we are as a company, we've got a market capitalisation of just over $2 billion. We're very well funded with over $100 million cash in the bank to get us through our next major milestones, which includes completion of the definitive feasibility study on Hemi this quarter. And that's one of the key takeaways. In terms of shareholders, most of you would be aware that Gold Road Resources has just under 20% in the company, and then it's predominantly institutional shareholders, and Gold Road has been a very supportive shareholder since coming on the register. Okay, so in terms of Hemi, it's up in the Pilbara, and the discovery of Hemi has completely changed people's perceptions of large gold deposits in that location. And we, up until recently, had a 1,500 square kilometre tenement package. Through joint venture arrangements with Novo Resources, we've increased that by about 70%, and we now have an up to 50% exposure on an additional 1,000 square kilometres contiguous with that previous 1,500 square kilometre tenement package. We recently put out a resource update to that 11.7 million ounces in total, of which Hemi accounts for 9.5 million ounces, and that 9.5 is an increase year on year of 1 million ounces from the previous update last year. Okay, so just in terms of Hemi, why is it so attractive? It's been interesting listening to the presentations this morning. In terms of production rate, we're looking at a very solid 500 to 600,000 ounces a year from the one operation here at Hemi. It's got a very low capital cost intensity. When you compare it with other undeveloped gold assets on a world scale, Hemi is the most attractive from that perspective. And we've also targeted lowest quartile operating costs. And we've been doing that through the pre-feasibility study and the current definitive feasibility study stage. The potential is that we could have reported larger production profiles and larger reserves, but we wanted to make sure we were doing that at sensible operating costs. As I said before, we'll have a DFS out this quarter. The other thing that makes Hemi so attractive, and we'll talk about this a little bit later as well, is we're in a great jurisdiction and we're surrounded by a lot of world-class infrastructure. We now have a very dominant provincial scale exploration package from which we can leverage the asset that we build in a couple of years' time. As far as exploration is concerned, and you would have seen some results yesterday that we put out on Yukon and Eagle, for the last couple of years we've been focusing on increasing the confidence level of the resources at Hemi to feed into the different studies that we've had, the PFS and now the DFS. We've been trying to increase the confidence of the resources, increase the scale of the reserves, and give people more confidence in our production profile. While that's all been going on, we've been looking at all sorts of project financing options, and there's a lot of strong interest in that, particularly from debt providers. The project's been significantly de-risked over the last couple of years. I won't go into all of this, but a couple of really important milestones that we've achieved are that we have put in place a mining agreement with the Kariyarra people over Hemi. That was signed in December last year. And also we've completed, recently completed heritage surveys over the entire project footprint, development footprint, in the last year or so. And we did those heritage surveys with the new Heritage Act and Cultural Heritage Management Plan processes in mind. We've also been growing organisational capability quite significantly, and some of you at the conference may have met our current project director for Hemi, Peter Holmes, and that's been the catalyst for other employment in the project development team. We're continuing to build that project and organisational capability so that we can bring Hemi into production. Okay, so this is where we are. Hemi's that red dot almost in the middle of that plan on the right-hand side there. We're surrounded by fantastic infrastructure. I'll let you read that. But the key thing for us, for De Grey as a company and for the project, is that surrounded by this infrastructure significantly de-risks the project from our perspective. It means we've got less capital costs that we have to apply to infrastructure, and it also means there's a lot less complexity around getting infrastructure to the site. We've also got sufficient good quality water in the ground there at Hemi. So it's a massive de-risking for us. Okay, in terms of resource growth, I mentioned that growth from a year on year to 9.5 million ounces at Hemi and then 11.7 million ounces now. Importantly, you can see those the blue parts of the chart there is how we've increased the indicated component of that resource. So last year we had 6.8 million ounces in indicated and we had a 5.1 million ounce reserve at Hemi. We've increased that to over 8 million ounces of measured and indicated now, and we're targeting closer to 6 million ounces for the reserve in the DFS. Okay, as far as that DFS is concerned, we're still targeting 500 to 600,000 ounces a year over the first 10 years of production. We're also targeting of that greater than 95% being reserves. That will give the market confidence in our production profile, and it'll also allow us to maximise the debt carrying capacity of the project with financiers. The other thing that's really important to us from a de-risking perspective is we're expecting most of that 10 years production to just come from Hemi. During the PFS we had around 1 million ounces coming in from regional deposits. We don't expect that we'll have to do that for the DFS. So it's again another significant de-risking. We've gone through quite a lot of studies, as you can imagine, and a lot of those studies being peer reviewed to get us to a high quality DFS this quarter. Again, I won't go through all those areas, but we've done a heck of a lot of work, and at the moment we're finalising things like capital and operating costs and fitting that all in with the production profile that we've looked at. And we'll also come out with, when the PFS is announced, a development timeline to get us into production. So this is the production profile from the PFS. On average, that was about 550,000 ounces for the first 5 years and then 540 over the first 10. We're expecting something similar in the DFS, but again of a higher quality. This is another significant de-risker for the project. So if you go on the site or if you go onto the ASX release, we talk about a lot of the PFS metrics around Hemi. And one of the things is that we've got a 2-year payback period, which is quite astonishing for this scale of project. Now, there's a reason behind that, and that's physically related to one of the deposits called Brolga, and more specifically the Brolga starter pit. So the Brolga starter pit's just shown there in cross-section in the red outline. It's got just over 1 million ounces in it from the PFS, at 1.7 grams a tonne, very low strip ratio, and operating costs of mid-$800 an ounce Aussie. That generates $1.6 billion in free cash flow, and that was done at a $2,400 per ounce Australian dollar gold price. So we're currently sitting around 2,900 to 3,000 Aussie dollars an ounce. So you could add another $500 an ounce to that 1.6 billion in free cash flow at this point in time. So along with the infrastructure, where we're located in this Brolga starter pit, for De Grey as a corporate entity and for the project, these two things represent massive de-riskings for the project, which is why it's one of the reasons why we're very comfortable about bringing this into production, apart from the capability that we've already got within the organisation. Okay, we've got a very proven flow sheet. This flow sheet, which includes a pressure oxidation circuit, has been the same one since I started with De Grey, which is about 3 years ago. All the test work we've done on the different deposits that we've got at Hemi and regionally work through this flow sheet. So yeah, we're very comfortable with it. And also it's quite interesting in that, the way we've set up the current plan with 2 ball mills and 2 autoclaves means that it's very easily upgraded in terms of throughput, very scalable. But wait, there's more. There's plenty of upside, and I think people have been able to see that from the drilling that we've done until now. But with the DFS, we're looking at having a really high confidence level production profile, but it's only until recently that we've gone back to extensional and discovery drilling, and that's really started since the end of the March quarter. So, we're really excited about the opportunities that we're going to bring to the table in terms of that exploration success. And also with that scalability on the plant, we can see more things in terms of that annual production run rate at Hemi and relatively early in the mine life. And I'll talk a little bit about that now. So this is a projection through the Eagle deposit and the Eagle pit. And I mentioned that yesterday we put out some results at Eagle outside of the grey area that you can see there, and certainly outside of the pit shell that we've planned for the DFS. Some of those results include 26.9 metres at 10.6 grams a tonne, 10 metres at 9.4, 37 at 3.4, 14 at 6, 16.8 at 4.3. So that's at Eagle, outside of the current pit, and some of those results are outside of the June resource. I'll just go to the next slide, and this is a plan view of Hemi, and you can see Ducon towards the left-hand side of that picture along with Eagle. So Eagle's towards the western part of Hemi as we know it. At Ducon yesterday we also announced some results, some of which were very close to surface, 8.8 metres at 4.8, 20 at 20.2 and 19 at 2. We're currently drilling around Antwerp, and what we're looking for there is for more near-surface open pittable resources. The drilling at Eagle and Ducon is to be able to demonstrate to ourselves and others that there's more likely to come from underground at Hemi. And we've been doing a lot of structural work on the project, and we're going to be following up the Ducon thrust out there to the east, to the northeast, where we've got a lot of smoke at places like Scooby. And what we're hoping to do at both Antwerp, Crow North and going into Scooby is find more near-surface mineralisation to take that 10-year mine life, that base load of the 500 to 600,000 ounces a year, out further. We put this composite long projection together, and this projection was included in an exploration update that Phil put out a couple of weeks ago. When you put each of the pits at Hemi end to end, it comes to around about 6 kilometres. Now that doesn't include Antwerp or Scooby. Now along that 6 kilometres we've got that 8.5 million ounces above 400 metres, and that's running at between 20 and 25,000 ounces per vertical metre. The underground miners here, like Raleigh, who may have done that sort of thing before, will tell you that underground mining, you should get a reasonably comfortable rate of 50 metres per year. So if you multiply that by 20 to 25,000 ounces per vertical metre, that's over 1 million ounces a year. Now, what we don't know is how much of that prize is going to be able to be available to us underneath those pits. Will it be 20%, 50%? What is that going to look like? But even at relatively small percentages of success, you can see how the underground production rate could add significantly to the overall annual production rate at Hemi. And one of the great things is that Brolga starter pit finishes at the end of year 3. So we can be driving into these areas within the first 5 years of production at Hemi, on top of the 500 to 600,000 ounce a year base case. So we're pretty excited about the potential of that. In terms of the regional package, those of you who've been following the story will see that we've picked up those orange tenements in a joint venture with Novo, so we have the opportunity to earn up to 50% there by spending $25 million over the next 4 years. But what's really interesting is at Hemi, I mentioned earlier that we'd relied in the PFS for the regional deposits to deliver around about 1.1 million ounces into the production profile for the PFS. We see Hemi being capable of generating most of that 500 and 600,000 ounces a year from the DFS. And what that does is take us back to the future a little bit in terms of looking at the potential for a regional processing facility around something like Withnell. So we've already got 1.7 million ounces in resources there. We haven't done a lot of resource extensional work on the regional deposits in the last couple of years. We have made some discoveries at Withnell. We did put an announcement out on Taorana a few weeks back, and we showed that there was extensional potential there. But we haven't been back to Mallina for a long time, and we haven't conducted exploration at Becher, which is on the Novo ground at all. So before Hemi was discovered, the company actually had a scoping study that it had announced that looked at a regional processing facility at Withnell that would produce 100,000 ounces a year. So that for us would be, conceptually a minimum of what we would look at there. So, what's a reasonable conversion of resources to reserves out there into production rate? Is it 100,000 ounces a year? Is it 150? What's the number? But I guess the point is, you've got Hemi sitting there at 500 to 600 from the open pits for 10 years. There's the potential for more from underground coming in within that 10-year period. And then also you've got the potential for a regional processing facility generating concentrate anywhere upwards of another 100,000 ounces a year. We would look at the underground potential at Hemi and also the regional potential after we're generating cash flow just from Hemi. So we wouldn't look at increasing capital costs leading into Hemi by doing those projects, but you very quickly get well beyond 500 to 600,000 ounces a year on this project within the first 5 years of Hemi coming into production. So I just wanted to finish up there, but talk about our strategy. De Grey has said for a long time now that we're interested in taking this into production. And the reason for that is that simply on the Hemi base case alone, we see a significant re-rating in the company's share price on the back of the cash flow that's generated from operations and the multiples that we should get in our share price on that. And for De Grey shareholders, we see that re-rating as the greatest return that they should get on their investment relative to any other options. And we've looked at most of the options you can think of, and that's the best option that we can see at this point in time for De Grey shareholders. So that's what it's all about. It's not because we've got some ideology that we need to develop and produce at Hemi. It's all back to value for De Grey shareholders. I think you'll see more increases in the resource scale on the project at a greater rate than you have in the last couple of years, because now we're focused on that. We're continuing to look for more near-surface open-pittable resources so we can extend that base case mine life, and then we'll add on top of that, and we'll continue to grow our organisational capability, which we have done both at a board level and at a management level, so that we can deliver this project. Thank you.
Thanks very much, Glenn.